Hey everyone, welcome back to MSTR Daily. My name is Matt, and in this video, we have a few massive stories we're going to go through. The first one is that the US Supreme Court just approved the sale of the Silk Road coins just weeks before the election. Also, in the last few weeks, the MSTR multiple to net asset value has been increasing a lot. And we're also going to look at the increase in the short interest and try to figure out if the recent rise in the stock price was caused by a small short squeeze. We will talk about all of that and more in this video. But before we get into the news, check out MSTR Pro, where you can look inside my options trading portfolio and see how I'm positioning for the Bitcoin bull run from both the long and short side. I release these videos about once a week where I update you on my portfolio and look at the market more in depth than we do in these daily videos. So if that interests you, feel free to check it out. For our first story, we do have some unfortunate news. The US Supreme Court just ruled that the US Marshals can sell the 69,000 Silk Road coins worth about $4.4 billion. This is what Crypto Briefing reported. The US Supreme Court has declined to hear an appeal regarding the ownership of 69,370 Bitcoin seized from the infamous Silk Road marketplace. This decision paves the way for the US government to move forward with selling the $4.4 billion worth of Bitcoin. The decision effectively upholds a 2022 ruling by the US District Court for the Northern District of California, which ordered the government to liquidate Bitcoin under existing laws. The case, brought by Battleborn Investments, argued that the company had acquired rights to the Bitcoin through a bankruptcy estate connected to the Silk Road. Battleborn claimed that the Bitcoin was stolen from an individual known as Individual X, who allegedly took the funds from Silk Road. However, the courts ruled against Battleborn, and with the Supreme Court declining to hear the appeal, the government is now free to auction off the Bitcoin. The US Marshals Service is expected to handle the liquidation, while several formalities remain before the sale can proceed. This will likely result in one of the largest sales of seized Bitcoin in history. The US government has already moved significant portions of the seized Silk Road Bitcoin in recent months, likely in preparation for the sale. It is also possible that Coinbase Prime, which has a custody agreement with the US Marshals Service, has been holding the assets on the government's behalf during this period. This arises as the handling of seized Bitcoin has become a point of debate in the 2024 election. In July, former President Donald Trump, speaking at the Bitcoin 2024 conference in Nashville, vowed to create a strategic Bitcoin stockpile and retain all government-seized Bitcoin if he is reelected. So from what it sounds like, this sale will not be like Germany's sale this summer. Germany straight up market sold 50,000 coins on exchanges, which tanked the market. But the US has a history of auctioning off the confiscated coins. Now, it depends who buys it. That individual or group could then turn around and market dump, but we would know that's coming by tracking the coins. If they were just to market sell the coins, they do have processes in place to mitigate its effect on the market. We don't have a date for when these will be sold or auctioned, but I'm optimistic that this is just a small blip on the radar and that the auctioning process will have a limited effect on the market, and this initial scare could just end up being a buying opportunity. And with the opportunity of an auction, I posted this on Twitter. I would love it if Saylor proposed a $2.2 billion at the market offering and $2.2 billion convertible note offering to purchase the $4.4 billion worth of Silk Road coins at auction, moving it from public confiscation to private diamond hands. The US currently holds over $12.5 billion worth of Bitcoin, so the sale of these Silk Road coins would reduce their holdings by about a fourth. I'd much rather have the private sector hold the 69,000 Bitcoin instead of the government, regardless of who's in office next. Okay, for our next story, let's take a look at the returns in October so far. We talked about Bitcoin's historical monthly performance a few weeks ago, and I do ascribe to the fact that markets are cyclical and seasonal. And although history does not repeat the past, it often looks similar. October is historically Bitcoin's best month, with only 2 of the last 11 Octobers being red. And when they were red, they were only down 3.8 and 12.9% respectively. And when October is green, it's very green, with months up 28%, 39%, and 47%. Now, in the past, the market cap was smaller, but the point is that a lot of Bitcoin's gains in the past have come during this month, and right now we're sitting in the red at about -4%. I'm not sure what that means for the rest of October moving forward, but I am inclined to still think that we finish in the green, even if it's only slightly. I am of the opinion that market participants will front run the investors that are sitting on the sideline waiting until after the election, because if they are going to put their money in the market, why would you wait on the sidelines with them when you could just buy before? Therefore, I think that we could see October finish green alongside a green November and possibly December, but we'll see. I'm obviously guessing. And another reason I think we're going to keep going up in the next few months is because we've been consolidating since March. That's 7 months of downwards and sideways chop, and I think the patient will soon be rewarded. But I don't have a time machine, so we'll have to check in on this in a few weeks. However, I'm not the only one who thinks we're getting close to a breakout. Checkmate posted this on Twitter of the sell side risk ratio. There's kind of a lot going on in this chart, but what he's trying to show is that unless we have one final washout of liquidity, Bitcoin is in an oversold environment. This is what he posted alongside the graph. The Bitcoin sell side risk ratio is trading well into the low liquidity zone. This means that the vast majority of coins moving around on chain are not locking in large profit nor loss. It has already been taken, and investors demand a new price range to reawaken supply. He continues, this can be a major sell-off event to create capitulation level fear, or a major rally to restart the profit-taking engines. As it stands, all hands are sitting on on their coins, with volumes aged 6 months and older being remarkably dormant. Bitcoiners are in hodl and see mode. Now, for the record, on-chain analysis has not historically been a good predictive style of analysis, but there can be some value to see the current state of the market. And I think this chart just highlights that investors are bored, and if enough investors become bored and want higher prices, they'll continue to wait. And when there are more buyers and fewer sellers, price moves upwards to find that new liquidity. So I think we're getting closer to a breakout each day, but let's look at 2 more charts just to inform ourselves about where we sit in the market. The first chart is from the Gold Prairie on Twitter. He shows this channel from another perspective using curves to mark the bottom, middle, and top of the channel. And these simple curves show the trend change in Bitcoin from the lower lows to now higher highs and higher lows. There's always a possibility that this structure breaks down and we see the low 50s or 40s again, but I kind of view this current spot in the market like a tanker turning in the ocean. It's large and takes time to fully turn around, but once it starts heading in a direction, it's hard to stop. And this chart from Caleb Franson shows that on the monthly chart. Bitcoin has continued to use the previous all-time high back in 2020 and 2021 as a monthly level of support. And you can see the hammer candles, which show wicks lower, but it always seems to close above that support area. This is hopefully building a launchpad for the next move higher. And as he shows in a zoomed in chart this morning, the 60K level is important to hold right now for Bitcoin to move higher and to have that green Uptober, but we'll see, because by the time I post this video, we could have already fallen through that 60K level. For our next story, let's talk about the increase in MSTR's multiple to net asset value. As we stand at the time of recording, MSTR has a multiple of 3.3x. This differs from the chart on MSTR Tracker because that is only a multiple of their Bitcoin holdings, but a true mNAV calculation shows the multiple to what the company would be worth if its assets were liquidated and liabilities paid off. I prefer a true mNAV calculation, but again, the multiple to Bitcoin holdings is probably better for long-term consistent forecasting. And if we use some of MSTR Tracker's other charts, you can see that we are at the highest multiple that we have seen since March, which is very bullish. And when you measure MSTR using Bitcoin as the denominator, it's broken out to new all-time highs. And some may conclude that that's overvalued, but if we view MSTR as smart beta and think that it will outperform Bitcoin in the long run, we should expect this chart to increase up and to the right. Obviously, there will be corrections along the way, but I expect the MSTR over BTC chart to slowly increase over the next few decades. Okay, for our last story, we have a recent update on the short interest in MSTR as reported to the NASDAQ. The short interest increased about 2% up to 30 million shares short, which is up from 25 million. Bitcoin Pikachu posted this on Twitter. Implications of short interest data for second half of September showed almost up 20%. Does this mean the current rally is primarily driven by a short squeeze? Well, the price spike to 170 did not really have a big short interest spike. However, a large short interest spike of 23% back in June was followed by a drop in price to 129 in early July. His conclusions are that the price should be in the 170s if there was no short squeeze. And the last time we had an increase near this magnitude, the price corrected drastically down to $129 a share in early July. His next conclusion, I definitely agree with. He says the last time we hit 190 in March was followed by a big drop, but also at the same time, Bitcoin was overheated and needed to correct. But now Bitcoin is not overextended. In fact, it's been very cool and boring and less likely to have a massive correction. So Pikachu concludes that we could see the 170s and 160s after correcting from this minor squeeze. And he says that the current rally was not primarily driven by the short squeeze, but the last push into the high 190s may have been. So overall, we'll have to see what the short interest numbers are when they're released for early and mid-October, because if we do see a decrease from the September numbers, that means that some of the shorts were covered during the rally. Remember, the 30 million shares that are currently shorted are forced buyers in the future. So as it stands, that number of future forced buyers is up to 16% of the available float. But before we move on from this, we have a reply from our favorite Ben Workman, who said that this increase was probably a hedge for the $1.01 billion convertible note, which has about 5 million shares tied to it. And this hedge is a delta hedge that the convertible bondholders use to reduce the directional risk associated with the price movements in the underlying. And these convertible note holders likely account for a large percentage of the short interest on MSTR. And to get a little technical, Jeff says this: these are basically equity secured covered puts, and the convertible buyer pays the margin to hold the short open, so overall its effect is neutral on the stock. And the reason why these bondholders would want to delta hedge the underlying is due to the high vol. These convertible notes are purchased by pensions and bond funds, and they're more than happy with the high returns these converts offer, and they don't need the extra risk of high volatility in the underlying. So the overall conclusion is that this short interest phenomenon is likely neutral on the stock price, but there could definitely be a fund out there like Carisdale Capital that is long BTC, short MSTR, which would be a terrible trade and will continue to get blown out going forward, because I believe MSTR will outperform Bitcoin, say, over the next 12 to 13 months. But let me know what you think in the comments below. Do you think that we just had a small short squeeze over the last week? And do you think the multiple to net asset value will continue to expand? So with that, if you enjoyed the video, consider hitting the like button and check out MSTR Pro in the description below. Thanks for watching, and I'll see you in the next video.